The opinions expressed in this show are the views of the host and not necessarily that of WTRW, 94.3 The Talker, or the Bold Gold Media Group.
The following presentation is paid for by Century 21 Jack Ruddy Real Estate, who is solely responsible for its content. Portions transcribed.
All Century 21 real estate offices are independently owned and operated.
This is the Real Estate Roundtable with Century 21 Jack Ruddy Real Estate. Good morning. I'm Jackie Ruddy, broker, and with Pat Devaney, my husband, fellow realtor. How are you?
I'm doing well. How are you today?
Excellent. We have with us Angelo Ambersakia and Brooke Hines, also known as the A-Team at Cross Country Mortgage. Good morning.
Good morning. Thanks for having us.
Thanks for coming back to be with us. We're here every Saturday and Sunday. We're here Saturday at 11 a.m., Sunday at 11:30 a.m., where we discuss real estate. We have a full-time real estate office with many relentless realtors who've been guiding, assisting, and advising clients in real estate matters for over 50 years.
During the week, if you have any questions, you can email them to us at questions@jruddy.com. That's questions@jruddy.com. Or give us a call. We answer the phone. We have people in the office, and a live person will answer your call at 570-344-6724. And when you go to jruddy.com, click on the webcam tab and get a live view of Dunmore Corners and see what's going on.
View our listings, search the MLS listings, listen to archive radio shows by going to mobile-friendly jruddy.com, jruddy.com, where all the podcasts that we feature the radio show on are listed. We also have a bunch of social media. Check us out on social media. Okay. The A-Team, Angelo Ambersakia and Brooke Hines of Cross Country Mortgage. You've been doing mortgages for a long time. How long?
About 20 years.
Right. Then you guys teamed up not too long ago, and you're based in, your office is in Clark Summit, but you do loans everywhere, right?
Right. Our office is local in Clark Summit. We're licensed in the state of Pennsylvania, and we also have an out-of-state desk where we work. So if you're buying a property in another state, we could still discuss it with you up front and then have an appropriately licensed person handle it for you. So we can help you anywhere you're looking to buy.
All right. Thank you. I want to talk to you and tell you about money.com. They have 4 expert predictions for 2024. Don't know. They did not identify the experts, but they just said experts. 1, the first prediction, mortgage rates will decrease. We've seen a little bit of that. 2, housing stock inventory will increase. That's good news for us because they're still at really low levels, listings for sale. Number 3, home prices will stay flat or slightly decrease. There are currently a handful of cities where prices have decreased significantly. That is not the case in this area. And number 4, home sales will increase. We're certainly hoping that. We don't see prices plummeting unless we get a sudden and large influx of listings, and I'm not seeing that. I'm not predicting that either.
And we don't know who these experts are.
No, we don't.
They are nameless.
They're anonymous.
Anonymous. It was on the internet, so it must be true.
Okay. So that should bode well for you guys and me, right?
Yeah, it absolutely does. And the one thing I would be a little bit careful about, Jackie, there is there are predictions of rate drops this year. There are predictions of rates coming down. If you're thinking of buying a home, don't try to time it perfectly or keep waiting and waiting to buy. Get in there, find the right house. You could refinance if they come back down. But the most important thing is getting the right home, what you're looking for. Are they going to come down next month? Are they going to come down in 6 months? How much are they going to come down? And go online and use a payment calculator. You know, if you're borrowing $150,000, put in 6.5%, put in 7%, put in 6%. See how much it changes the payment. You might be surprised. It's not as much as you really think. So there's no reason to wait for these to come down. You know, look for the right house, find the right house. And if it does happen, great. Go in and refinance and get the lower rate.
I find a lot of times buyers don't understand closing costs and down payments. They think it's the same thing. Do you find that in your discussions with buyers when you meet with them?
Yeah, we do. So just to kind of go into that down payment, that's your, whether you're going to put down, whether it be 20%, 5%, whatever it may be for you. You have your down payment. That's one thing. And then you have your closing costs, which closing costs consist of, a lender fee, title fees, escrow, money for your escrow account. And should I go into what an escrow account is? No. Okay. Maybe for another time with that one. But yeah, so there's money set aside for insurance, taxes. And then, like I said, title fees and lender fees are all that all consists of your closing costs. So there's always going to be those two things. One good thing is, I don't know if you want to get into a seller's assist. If you want to roll your closing cost into your mortgage, Seller's Assist was created for those people who don't have a ton of money up front for closing costs and the down payment. So, talk to your lender about that if you're interested in adding in a Seller's Assist to your mortgage. So
we have a $200,000 house, and it's a conventional 5% down mortgage. Yep. They come to the table with $10,000 to put down. So they're mortgaging $190,000.
Yes.
Okay. Mm-hmm. In addition to that, they have closing costs.
Yep.
And I would always say rule of thumb. I don't know if you would agree with this statement. However, this is how I would help buyers understand this. Usually calculate anywhere from 6 to 8% of the $200,000, and that would be pretty, general closing cost amount.
Yeah, I mean that's a good estimate. I mean, you never really know. It depends on taxes.
Lot of factors.
Yeah, a lot of factors. So that's
and
fine.
One thing to remember too, if you're looking to buy a house, when you're talking about closing costs, a lot of closing costs are the exact same thing at any lender. You want to look at that particular lender's interest rate, and then like what points or fees they're charging. But transfer tax, title insurance, an escrow account being set up, that's going to be exactly the same anywhere if you're doing that. Those numbers are going to be set. You want to compare lender to lender rate, and what am I paying to get that rate? Not just the rate. You'll never get an interest rate from somebody and know whether you're getting a good deal unless you have the backstory about what's it costing you to get that rate.
So on that example of the $200,000 house, that buyer would have to have $10,000 to put down, and then they would have to say, I always went with the higher 8% closing costs just to cushion.
Yep.
So that would be $16,000. So $26,000 before they even get in, cross that threshold through the front door.
Right.
That's before, utilities, furniture, appliances.
Yeah.
And all that other good stuff.
We did hit on Seller Assist a little bit, Jackie. I don't know how far you wanted to go into it, but as a quick example, let's say that house is $200,000 and you're putting 5% down. That's $10,000, right? Now, if the room is there for a Seller Assist and we make the price say $210 instead of $200, you are putting a little bit more money down. So instead of putting $10,000 down, you're putting $10,500. It's an extra $500 down. But by doing that, you're saving $10,000 at closing.
You don't have to dip into your savings.
Right. It's basically,
you don't have to
instead of coming
your
up
cash
with
reserves.
10 plus another 10 for closing costs, you're coming up with 10, and then the assist is covering your closing costs, or a vast majority of them.
So you're financing that amount over 30 years.
Right. You're putting a little bit more money down. In that example, it was $500, the difference. But by doing that, you're saving many, many, many thousands of dollars, and it's making it easier to buy the house. So as long as there's a little bit of room in the value, because the house has to appraise at the amount including the assist. So in the example I just gave, it would have to appraise at $210 or more. But if it does, you're going to save a ton of money, and your payment won't be much different. But your bank account will look a lot different, because instead of coming up with 20, you're coming up with 10.
Okay. Yeah, Seller's Assist is also something, from a seller's standpoint. It does depend on the agent that's working with the seller to help them understand. Last show, Brooke, you mentioned how creative, you have to be and what you do, you and Angelo. And that is a creative way to finesse funds, correct?
Yeah.
Yeah,
Okay.
and I think, like you said, Jackie, it has to be sold to the seller that they're still getting the money they want. So in that example we just gave, they wanted 2, they're getting 2. So even though the price is $210 and they're giving back 10, they're still getting what they wanted. It's just a matter of explaining it properly. And for our listeners out there, depending on the type of loan you're getting and depending on how much money you're putting down, that will tell you the maximum seller assist you could do. So talk to your lender. Is it an investment property? Is it an FHA loan? Are you putting 5% down, 10% down? It all affects how much assist you could do. So talk to your lender and get all the details on that.
Good advice. With us today, the A team, Angelo Ambrasakia and Brooke Hines, Cross Country Mortgage. Okay, so let's then talk about credit scores. And we touched on this a few weeks back. We're talking about what is that magic number? Well, it depends.
Like
right?
everything else. It
right.
depends.
It depends and the type of mortgage, right? So would you talk to us about the different credit scores and also what goes into the credit score?
Yeah. So obviously the higher the credit score, the better, if, you're not pre-approved, let's say, we go over a file and they're not qualified now, based on whatever reason. It's always a good idea to just keep working on your credit score because the higher score that you have, the better rate you're going to get. It affects a bunch of things. So that's number one. Just keep aiming for a higher and higher credit score. Some of the things that affect credit scores, just for example, a lot of people think, I'll pay everything off and my credit score is gonna be better. We hear that a lot. Like, well, let me just pay stuff off and I'll. Actually, no, because, your payment history, the types of credit, you need a credit history to get a credit score. Like that credit history is very, very important. So you want to diversify your credit, different types of loans. That's going to help make sure that you're paying everything on time, consistent payments. That's all really, really going to help. Keep your balance low. That's another huge thing that we see. Somebody could have, a bunch of credit and pay everything on time, but if every single card that you have is maxed out, that's going to affect your credit. So make sure that your balances are low. We like to say 30% utilization, under 30% utilization. Maybe you can even call your credit card and ask them to increase the limit, so that your utilization is lower, so that's an idea. But, keep a good credit history, keep a good payment history, keep good balances on your cards, whatever you have, and that's all going to help.
Pay on time.
And when we do a pre-approval, by the way, we get 3 credit scores, Experian, TransUnion, and Equifax. It's not an average of the 3, it's the middle score. So whatever the middle score is out of those, that's what everything is going to be based on in our world. And that middle score is critical because there's certain grants that you need to have, like say a 660 or higher to get. If you're looking for a loan right now and you get an interest rate quote, my neighbor just got 6.5%. Well, they had a 780 credit score. You have and it doesn't take a big difference. They had a 780, you might have a 700, but your rate is a half a point higher. So the higher you keep that score, like Brooke said, it opens up doors and it gets you better deals the higher it is. So very, very important in our part.
And it affects private mortgage insurance, which you have to carry on a mortgage with less than 20% down.
Yep.
And it affects property insurance, homeowners insurance, car insurance. It affects a lot of different things, not just whether or not you qualify for a mortgage.
Right. And that middle score, again, is what triggers everything. We throw the lowest score out, we throw the highest score out, and that middle score is the one that is used. And if you have a co-borrower, if it's a boyfriend and girlfriend, a husband and wife, if one of you has a much lower score than the other, everything is based on the person that has the lower score. So if I have an 800 and my girlfriend has a 600, I don't want to say my 800 doesn't matter because it will help, but the rate and everything else is going to be based on the lower score.
Right.
Yes.
Okay. You don't bring her up, she brings you down, sort of.
Right. It'll help. It could help. It'll definitely help you qualify having one person with a very high score. But your rate and what programs you qualify for are going to be based on the lower of the two middle
It's going to
scores.
affect things, yeah. Okay, I could see that happening. Now, what about somebody that doesn't have any credit? No credit. That's almost as bad, or is it worse than bad credit?
Probably worse.
Yeah. What do you say to
'Cause it's easier
somebody?
to fix.
Yeah, right.
Right. Yeah, and there's actually cases too where if somebody doesn't have a credit score, we actually may be able to help them because we could build like a manual credit report for them if we get trade lines for bills that they have. If they have bills in their name, we could collect these bills and put together like a manual credit report.
Some examples. Auto insurance,
yeah,
cell phone bill,
yeah, utilities and everything like that. Just different kinds of bills, whatever. So if that's the situation for a buyer, let us know, and then we can look at that. But other than that, if you don't have a score, you can just start opening some secure credit cards that report to all three bureaus, so that all three bureaus are going to have record that you got that credit card. So we can suggest some credit cards as well to get for those situations.
It's like a prepaid card. A lot of banks are offering it right now. You go in with $500, they give you a $500 limit. So they know they're not going to lose any money. But at the same time, they're reporting that to the credit bureaus, and you're starting to get a history established. But definitely important to get a history established.
How long does that take, getting a history established?
It could take months. It could take a while.
6 months to a year. Yeah. Okay.
Yep.
The A-Team, Angelo Ambersakia and Brooke Hines of Cross Country Mortgage. How does someone get in touch with you, please?
So our website is angeloateam.com. That's ANGELOATEAM.com. All of our contact information is there. And if you're even ready to start the process, you can put in a pre-approval right there. But again, our website is angeloateam.com.
And your phone number?
570-468-7995. That's my direct line. You could text me, call me on that number, and let's have a chat. Let's talk about where you're at, where you need to be, and how we're going to get you there.
All right. Pat, would you like to review a listing, please?
Yes, we have a beautiful 3-bedroom, 2-bath home at 1249 Prescott Avenue in Dunmore for $215,000. This home, it's just been remodeled and everything has been updated. It's got a new kitchen with new tile floors, new cabinets, granite countertops, and new appliances. The rest of the house has just been painted and there's new flooring throughout. The bathrooms are new, the windows have been replaced, and the roof is only 4 years old. But the best part is the taxes are only $1,500 a year, and it also has a low-maintenance yard and off-street parking. If you're looking for a like-new home, take a look at 1249 Prescott Avenue in Dunmore. That's a 3-bedroom, 2-bath home for $215,000, and that's listed by Kristen Baum of our office.
We appreciate our generous sponsor this week, Rinker Incorporated. They specialize in automatic generator and power storage systems, ductless heating and air conditioning. They are also your full-service electricians, serving the area for over 35 years. Customer satisfaction is Rinker Inc.'s #1 priority. Their focus is on quality workmanship along with honesty and integrity. Rinker Incorporated combines their knowledge and extensive experience to ensure your needs are met. Contact Rinker Incorporated today. Call 570-698-9696. That's 570-698-9696, and visit them at gorinkerinc.com. They look forward to adding you to their long list of happy customers. Stay with the Real Estate Roundtable with Century 21 Jack Ruddy Real Estate on 94.3 FM The Talker. We'll be back. Are you ready to make your next move in the world of real estate? Look no further than Century 21 Jack Ruddy Real Estate, your trusted partner in buying and selling homes. If you're a homeowner looking to sell, Century 21 Jack Ruddy Real Estate will ensure you get the best possible price in today's competitive market. And if you're in the market to buy your dream home, Century 21 Jack Ruddy Real Estate will help you find the perfect place to call your own.
Congratulations.
We've adopted the popular saying, an educated consumer is our best customer. That's why since 2010, we've hosted the Real Estate Roundtable with Century 21 Jack Ruddy Real Estate Saturdays at 11 a.m., Sundays at 11:30 a.m. on 94.3 The Talker. Visit jruddy.com. That's JRUDDY.com or call 570-344-6724. Century 21 Jack Ruddy Real Estate, where dreams find their address. We're back with more Real Estate Roundtable with Century 21 Jack Ruddy Real Estate on 94.3 FM The Talker. I'm Jackie Ruddy, broker, and with Pat Devaney, my husband, fellow realtor.
And we're back.
With the A-team from Cross Country Mortgage, Angelo Ambrosacchia and Brooke Hines. Great discussion today, guys, and I want to talk about any listener out there that has had a bankruptcy, underwent a short sale or a foreclosure. What do you have to say to them? They're able to eventually buy again, correct, and get a mortgage?
Correct.
How long do they have to wait to do so?
Well, the best advice we can give you there is, again, we've been stressing the importance of a pre-approval, right? So when you go in to get pre-approved, these are going to be on the credit report as an event on the credit report. So we're going to see on there whether there was a bankruptcy. There's waiting periods from the discharge date that you need to wait before you can qualify for a new loan. So, for instance, if you've had a foreclosure, it could be up to 7 years. For a conventional loan, FHA is a little bit more forgiving in that case. You're looking at more like 3 years. If you've had a bankruptcy, whether it's Chapter 7 or Chapter 13, that matters. The waiting period's a little bit longer for Chapter 7. If it's a bankruptcy, we may be able to do it a little bit sooner than the waiting period if there's extenuating circumstances. There's a lot involved in how long you need to wait and whether we can make an exception possibly to that. So you're going to want to talk to the lender about that. And another important thing to mention with that, Jackie, is just because the waiting periods are over doesn't mean you're going to qualify. So, somebody can have a bankruptcy from 5 or 6 years ago where they're still kind of showing up on the credit report. They're past the required waiting period, but they're still not scoring an approval when we run it through. One of the worst things that could happen for you is having delinquent debt after that. That's a huge red flag on a credit report. So if you did have to go through something where you had to file bankruptcy, an unfortunate event caused a foreclosure, that's fine. Talk to the lender, talk about waiting periods, but also keep in mind that just because that waiting period's over doesn't mean you're necessarily going to qualify. And also keeping your credit clean after the event happens. So if you've had that bankruptcy 5 or 6 years ago, and in the last 12 months you've been behind on a few bills, it's going to be very, very hard to get an approval on something like that. So it's all part of the pre-approval process and something that you really need to look into right away if you have had something like that happen.
And the time frame, the clock starts ticking from discharge date.
From the discharge date, right? Not the date that you filed.
Right. Okay. Because that's another important piece to all of this, correct?
Yes, very important. On a conventional loan, Chapter 7 is 4 years from the discharge date. And on a Chapter 13, it's 2 years from the discharge date. So those are the dates you're looking for. We already mentioned the dates on a foreclosure. So keep those discharge dates in mind when you're thinking about potentially buying a property.
Okay, very good. Now, let's talk about what to expect from an appraisal, not what to expect from an appraiser, because that could be something completely...
Two very different things.
Yes, okay. All right, so let's talk about it. An appraisal, a lot of times buyers think that the appraisal is the inspection, or vice versa, the home inspection. And they're two different functions.
Right, right. Yeah, an inspection is really to answer the question of like what's wrong with the house, or what is the whole story about the house, and any problems you have to watch out for, anything like that. The inspection is really to tell the buyer the full story of the house. The appraisal's a very different purpose. The appraisal is really how much is the home supposed to be valued, or how much is the value of the home, how much is it worth. And an appraiser, their process is looking at comps, comparable sales in the area to, reach the value that they come up with for your specific home. And that really is to protect the buyer. And it also protects the bank who's lending money on a home. We can't lend money on a home that's not worth the value. We can't lend all this money if the value is not there. So it's really to protect all parties involved.
And that's when it gets tricky, when we run into these bidding wars we're seeing. You can offer whatever you want to offer, but it's got to appraise.
Yeah, right. And that's why the seller, if given the choice, goes with the cash offer, because they avoid, anything like that.
Right, right. In that case, it doesn't matter if they're, and also too, if it, appraises low and the buyer's like, I don't care, I still want this home, they could put in the difference,
yes.
And it doesn't matter. They could still get the home. So it's not that big of a deal. And a lot of people too, to get their offers accepted, you might put that right in the sales contract of, if this doesn't appraise, or, we're going to, get rid of the seller's assist, or we're going to put in the difference. So, that can be an added way to get an offer accepted, is to put that in there.
Mm-hmm. Right. So last show I asked you what you were seeing when you see a deal fall through, what the reason is, what's the most common reason. And so for us, I would have to say the most common reason something falls through is because of home inspections. I see that being the number one reason why things don't get to the closing table. Number two, I would have to say financing, and or the lender, like you said last week, didn't do their due diligence, just pre-approved, and didn't do a lot of the back end, behind the scenes, dive deep, or appraisal.
Right.
And the other thing to mention on for the appraisal, Jackie, is this is another reason why you really want to try to use a local lender. Our office is in Clark Summit. We have a panel of approved appraisers we use that are all, have been doing appraisals in this area a long time, understand our market. You go online and get a pre-approval from some company, God knows where. We don't know where that appraiser is they're going to send in for that deal.
Some guys come up from Allentown in Philadelphia to appraise our area.
Buyers don't take that into consideration enough, where that's a really important part of this. We have very good appraisers that are local, that have been doing it, that we trust, that do our appraisals. So, this company may be offering you a hair better rate somewhere, but you're losing that part of it. You're losing the local appraiser, maybe, where they're sending somebody in from Allentown or something like that.
They do not know our market. There's idiosyncrasies in our market that they cannot, it's impossible for them to know. And so there's, different pockets, different neighborhoods. I can't tell you how many times that type of appraiser would come and the deal would tank because of it.
Right. That's something that's not really thought of much. People up front it's always rate, where's the best rate? Where's the best deal I'm going to get there? But, it might be, even if we are in some cases, maybe we're a little better, a little worse, whatever. But there's other things to keep in consideration as far as the service level provided, and the appraiser, working with a local panel that you could trust versus a company that's going to send somebody in from God knows where that may kill the deal because they don't know the market around.
Right. And anybody can look at a computer and try to find similar. That's what people do when they're finding sales comparables in an appraisal. They look at a computer and similar homes in similar neighborhoods or zip code, but there's other things that factor in, and it's important to have somebody, like you said. How does someone get in touch with you?
Our website is angeloateam.com. That's ANGELOATEAM.com. All of our contact information is there, and if you're even ready to start the process, you could put in a pre-approval right there. But again, our website is angeloateam.com.
Thank you, Brooke and Angelo, for 2 weeks of fabulous discussion.
You're welcome.
Thank you so much for having us. We appreciate it.
You're welcome. Join us next Saturday at 11 a.m., Sunday at 11:30 a.m. to listen to more of the Real Estate Roundtable with Century 21 Jack Ruddy Real Estate on 94.3 FM The Talker.